Hi, you're welcome to my channel. So we are still handling the purchases system. In the previous video, we managed to handle the occurrence assertion, completeness assertion, and then the accuracy. So in this video, we are going to handle cutoff, classification, and then we shall have an example. Yeah, and then we shall be done with the purchases system. So we are going to start with cutoff. Yeah, as we said, cutoff it's about recording the transactions in the correct period. So let's look at cutoff in the purchases system. So the objective for cutoff, as I said, in the sales system is to ensure that purchases are recorded in the correct accounting period. So this objective is the same. Like it's the same for every transaction, you just keep changing this. Like all the objectives of the assertions are the same. You just keep changing the name of the transaction. So here in sales, we said to ensure sales are recorded in the correct accounting period. So here we are saying to ensure purchases are recorded in the correct accounting period. So that is the objective. They can ask you the objective of the cutoff assertion in the purchases system. That is the assertion. In case they ask for the objective of the cutoff assertion in the sales system, you just change that and then you'll be good to go. Any transaction, you just keep changing. The objectives are the same. So controls, like how can management make sure that all purchases are recorded in the correct accounting period? So that's when we come up with the controls. So this is a control that can be put in place to make sure that this objective is achieved, to make sure that purchases are recorded in the correct accounting period. So the control is all goods received notes are sent to the payable ledger section daily, and they are matched with corresponding purchase invoices and then recorded. It's the company that makes the goods received notes. Like after them receiving the goods, they come up with this note and then they send the original to the supplier and they remain with the copy. So all goods received notes are sent to the payable ledger section daily. Then they match with corresponding invoices and then recorded immediately. So that will help them to make sure that all purchases are recorded in the correct accounting period. Because if you make a goods received note and then maybe you take like 2 days, maybe it was made on 30th before like the end of the month, but then you take it to the payables section maybe after 2 days. Yeah, it will be recorded in the next month or in the next financial year. Anything can happen. So all the goods received notes should be sent to the payables ledger section daily, and then they should be matched with purchases invoices to make sure that they match. Yeah, so that will help to achieve this objective. Then you should know that this is a common control when it comes to cutoff. Remember, in the sales system, we said when it comes to cutoff, you just change the name of the documents. We said all goods delivered notes should be sent to the receivables ledger section daily. So here we have the payables ledger section. So the other side we have the receivables ledger section. So things are the same, you just keep changing some words. So here we have goods received notes, the other time we had goods delivered notes. So all goods delivered notes are sent to the receivables section daily and matched with corresponding sales invoices. And that is the one for purchases. So things just cut across, you just keep changing maybe the name of the document and then the name of the transaction. Then when it comes to the test of control, like how can the auditor test this? The auditor is just supposed to compare dates. Like you get the dates of the goods received notes that were received before, just before the period end, and those that were received immediately after the end of that particular period. Then you compare with corresponding purchase invoices to see if the dates are matching, if the dates on the goods received notes are matching with the goods on purchase invoices. Yeah, so that's how the auditor can test this. And even in the sales system, we had the same thing. The auditor will compare dates on goods delivered notes, where we have goods received notes. In the sales system, we had goods delivered notes before and after the period end, and then compare with corresponding, instead of purchase invoices, we had sales invoices. So things are just the same, you're just supposed to understand how they work and then twist accordingly. So that is the cutoff assertion. So we are going to the last assertion in the purchaser system, which is classification. So for classification, the classification assertion, its objective is to make sure that transactions are properly classified in their accounts. Yeah. So how can management make sure that purchase transactions are properly classified in their accounts? So this is the easiest assertion that you will ever come across, because as I told you, the control is the same for all transactions, and then the test of control. So you just have to understand the objective, then you either understand the control or cram it, because it's just the same. In case they ask for the objective of the classification assertion, to make sure the transactions are properly classified in their accounts, then in case they ask for the control, it is the same. I'm going to show you it's the same. Then even the test of control, it's the same as we saw it in the sales system, but let me give it to you again. So this is the control for the classification assertion. It is general. Yeah, if you see this anywhere, this is the control, this is the test of control. Yeah. So a chart of accounts is maintained. You can join these two or separate them. A chart of accounts is maintained, then transactions are properly coded and reviewed independently. Then examine a sample of purchase invoices for proper coding. In sales, examine a sample of sales invoices for proper coding. So it's literally the same stuff. You just have to know the objective, then this is the same and this is also the same. You just change the name of the transaction that you're dealing with. Yeah, so I'm going to give you something like what they always ask, the assertion that they always ask, some little, how do I call it, hack. Yeah, about completeness, like how you can separate completeness from accuracy. In case maybe in case of an objective, it mainly appears in objectives. So they can tell you, let me first show a little bit. They can tell you that the auditor matched maybe the auditor selected a sample of sales from the general ledger, a sample of sales from the general ledger, and then matched to supporting documents. Supporting documents, it's where we have the goods delivered notes, the sales invoices, then the sales orders. So the auditor selected a sample of sales and then matched to supporting to supporting documents like goods delivered, not sales invoices or sales orders. So like here, let me first switch off this. I don't want that carrying there. I don't know if you're seeing. So here, from sales to supporting documents, like here the assertion that they are trying to test is occurrence, to check if something occurred. You start from the statements like the general ledger, then you go backwards. Here it's like going backwards. And then if they tell you that the auditor selected a sample of goods delivered notes or a sample of sales invoices or a sample of sales orders and checked if they were properly recorded, maybe in the general ledger, or the statement of profit or loss. So here the assertion that is being tested is completeness. This is for occurrence. For occurrence, you go backwards. Like you get sales from the general ledger or the statement of profit or loss, and then you match to see if there is supporting documents. That is testing for occurrence. Then for completeness, you go forward. Here you come from the supporting documents to see whether they were recorded properly in the statement of profit or loss, and then in the general ledger or sales ledger, stuff like that. So that's the difference. Like it may not be sales, it may be purchases, it may be something else. But as long as something is, if it's going forward, it's completeness. If it's going backwards, if they start from the financial statements, like if they start from maybe the general ledger, the sales ledger, the statement of profit or loss, balance sheet, when they're going backwards, just know they're testing for currency. Yeah, if they are going forward, just know they are testing for completeness. Hope you've understood that. Do I need to write it? Forward is completeness. Then backward is occurrence. So this mainly appears in what? In objectives. They'll give you a statement and they'll tell you that maybe the auditor tried matching, like selected a sample of sales in the general ledger and then matched it with supporting documents. Then they will ask you the assertion that they were testing. So you'll be able to know that it was occurrence. If they tell you the auditor got a sample of GDNs and then checked to see or inspected to see if they were properly recorded in the general ledger, in the statement of profit or loss, just know that that is completeness. Yeah, those two look alike, but one goes forward, another goes backwards. So it will help you. It's a common question most of the times. Yeah, in objectives. So let's put on our light. Yes, so that's the hack. It applies in all transactions. Yeah, for the completeness assertion, we go forward. For the occurrence assertion, we go backwards. That is it. Yeah, so we are done with the purchases system. The next thing we are going to look at is an example, and then we shall be done. So this is the question, but before we read the question, let's look at what is required. Part 1, they said identify and explain 4 deficiencies in the system. 4 deficiencies. Then part 2, explain the possible implication of each deficiency. So here they're asking for the consequences, implication of each deficiency. They have not asked for the control. Then share a recommendation to address each deficiency. So in this question, they asked for the deficiency, the consequence or implication, and then recommendation. Recommendation is the control. Yeah, recommendation is the control, but in this case, they did ask for the test of controls. So now let's go ahead and read the question. The question says, Steel Industries Limited manufactures building items in Namave industrial area and sells them in Uganda and the neighboring countries. The company's year end was 31st December 2014, and below is a description of the company's purchasing and payment system. So this is the purchasing system. Whenever production materials are required for reminder, like when we are given a question, when we are identifying a deficiency maybe or a risk, where you see something that is negative, any negative statement indicates a deficiency or a risk. Yeah. So we continue. Whenever production materials are required, the relevant departments send a requisition form to the ordering department. Then the purchases manager contacts a number of suppliers to see which can dispatch the goods first. The supplier is then chosen, and the purchasing manager prepares a purchase order and dispatches it to the selected supplier. Orders are not sequentially numbered. So that is a deficiency where you see anything negative. So orders are not sequentially numbered, and only orders above 10 million require authorization. So it means that other orders are not authorized. That is also a deficiency. So you underline that. Then the second paragraph is that purchase invoices are input daily by the purchase ledger clerk, who has done that work for many years, and as an experienced team member, he does not apply any application controls over the input process. So he does not apply any application controls. That is a negative statement. It implies a deficiency. So you underline that. Then every week, the purchase day book automatically updates the purchase ledger. The purchase ledger is then posted manually to the general ledger by the purchase ledger clerk. Then the payment system. SL maintains a current account and a number of foreign currency accounts. The current account is reconciled weekly, but the foreign currency accounts are reconciled after every 2 months. That's a deficiency. The other ones are reconciled weekly, but the foreign currency accounts are reconciled after every 2 months. So we underline that too. Then another one is in order to maintain a good liquidity position, SL has a policy of delaying payments to all suppliers for as long as possible. Delaying is something that is negative, so we also underline that. Then suppliers are paid by electronic bank transfer. The finance director is given a total amount of the payment list, which he authorizes and then processes the bank payments. So required, the saying as an external auditor of seal, write a management letter. Write a management letter without a covering letter on the purchasing and payment system of the company described above. So in the management letter is written by the auditor to those charged with governance and management to tell them about the deficiencies in the internal control of the entity, and then the auditor is supposed to mention the deficiency its consequence, and then the recommendation. So it's what they asked for in this question. Part A wants the deficiencies, Part B wants the implications, and then Part C wants the recommendation to address each deficiency. Yeah, so we start answering the question. So this is how it's going to look like: deficiency, implication, and then recommendation. So according to the first sentence, they said the purchases manager contacts a number of suppliers to see which one can dispatch goods first. So like when the manager is selecting the supplier, the manager considers only speed as the only factor when selecting a supplier, so that is a deficiency. So it's what I've written here: when raising purchase orders, the clerk chooses whichever supplier can dispatch goods faster or fastest. This is something that is wrong, because when you're selecting a supplier, you're supposed to consider other factors. The other factors like the quality of the materials that are being delivered, the price, all of that are supposed to be considered, not only speed. So this is a deficiency. Its implication is that it may result into the company ordering goods that are of a much higher price just because they can deliver faster, either a high price or low quality. Yeah, just because they can deliver faster. So they did not consider other factors like price and then quality. So this is the implication: they may end up ordering goods that are more expensive and then of low quality. Yeah, so what's the recommendation or the control that can be put in place? So suppliers should be pre-qualified or selected based on also other factors. Yeah, other factors like price, quality, and then maybe the speed of delivery. Yeah, so that's the first deficiency. So as I told you, like when we were dealing with purchases system, the notes, I was like, do not cram everything, because in auditing, the answers depend on the question that was given. So with the question, if you look at the question, you can be able to come up with the deficiency, the control, the test of control, the implication, and all that. Yeah, so this is the first deficiency. So we look at the next deficiency. So still on the first paragraph, there was a statement that was saying orders are not sequentially numbered, and only orders above 10M require authorization. So orders are not sequentially numbered. That is a deficiency. Like you cannot know that this is order 1, order 2, order 3. Yeah, so that is a deficiency. So it's what we've written here: purchase orders are not sequentially numbered, and that is it. Then you're supposed to rate its implication. I'm going to first switch this off so that we can be able to see. Yes, so the purchase clerk may fail to identify unfulfilled orders because orders are not numbered. You will not know which one is fulfilled and which one is not. And then in case they want to make a follow-up on something, maybe to make sure that things are, like everything is recorded completely, they may fail to do that because the orders are not numbered. So that's the implication. The purchase clerk may fail to identify unfulfilled orders and be unable to make a follow-up, just in case of any stock out. Then the recommendation will be based on this or this. So this recommendation is the same as control that can be put in place. So all purchase, all purchase orders All purchase orders should be sequentially numbered, and on a regular basis they should be checking which orders are fulfilled and which ones are not. Yeah, so these are some of the deficiencies according to the question. I'm going to put the remaining answers. So we are done here with the purchases system. Yeah, if you have any questions, please ask. Let's catch up in my next video.